Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. This segment is brought to you by Plum Lending. You know you can get a commercial real estate loan online. Visit getyourplumloan.com. Well, my guest is George Ratiu. He's Director of Quantitative and Commercial Research with the National Association of Realtors, and they've come out with a new report, Commercial Real Estate Lending Trends 2017. And George, I think a lot of people are curious about some of the other changes that maybe Congress and our president may do. And one, there's been some talk of adjusting EB-5, and if you'd like to briefly describe EB-5 to some of our listeners who may not be familiar with it, but also some changes could impact commercial real estate, right?
Indeed, Michael. And the EB-5 is a program whereby foreign investors can put money into the U.S., invest the money into the U.S. with restrictions and certain conditions in exchange for permanent residency in the U.S. It's been referred to as sort of money for green card by a lot of folks, but it has been particularly popular with some foreign investors. In addition, it turns out that it has offered quite a bit of capital for real estate investments over the last few years. It's been, again, given the conditions and some of the restrictions, the money is supposed to go to these regional centers, which then ensure compliance and the distribution of funds. The money have to generate certain number of U.S. jobs and be in the country for a certain period. So obviously there are some hurdles to it. However, a lot of folks and critics on Capitol Hill and throughout the country have been concerned about some perceptions of abuse or perhaps a lack of enforcement. So going forward, what is it that we can expect? It sort of goes along with the theme for this year of how much are we going to see in terms of results from the current administration and Congress, given how much they're trying to accomplish and how long their agenda is. So given tax reform, given all these other things, is EB-5 going to be also modified? It is up for reauthorization this fall, so obviously there's some sense of a deadline for the program. And there's been discussion about raising the threshold. Basically, it's been about $500,000 investment. Folks are looking at raising it to $1 million or possibly more. But again, I see the likelihood of that about in the same vein with some of the other initiatives that Congress is working on.
Yeah, well, it should be interesting because I think some investors have made good use of the funding for their capital stack with EB-5 financing from these foreign investors. And so you mentioned earlier in the show about foreign investment in the U.S. So what do you expect moving forward this year, next year for volume there?
Very good question, and frankly, my expectation is that that foreign investment is likely to continue to flow into the U.S. And as I touched earlier, I think a lot of that basically is driven by two main factors. Number one, and that's what I mentioned earlier, global basically debt yields are very low. We're talking, if you look at the European Union, with the exception of the Bank of England, some of the other central banks are offering in the 0 to 0.5% rates on long-term government debt. Same thing with Bank of Japan. So for a lot of investors who are looking for better returns, and this is where the second factor comes in, and safety. So they're looking not only for returns, but safety of capital. The U.S. makes a very compelling case. Number one, we have very strong legal systems, so property rights are obviously important. In addition, when you look at the economic performance, while moderate over the last 6 to 7 years, it still has grown. Employment continues to be strong. And in tandem with that, the performance of commercial real estate assets has been solid. So you're looking at large cap markets, 6.8% cap rates. Let's assume they go to 7, and in small cap, let's assume they go to 8%. even in a rising interest rate environment, that is obviously a much better return than you're likely to get more or less risk-free. And when you consider that for most foreign investors, their purchases of these assets are made practically all cash, cost of funding is not as big of an issue.
Right. You've mentioned before the multifamily market, and I think a lot of the listeners or viewers may have some concern. You know, it's had a great run. It's just been an incredible sector for rate growth and for occupancy growth and value increases. And one of the things that seemed to impact it, and I want to get your opinion on it, is the difficulty for the tenants to go buy single-family homes. So my question is, what do you expect for underwriting for single-family home buyers moving forward? It seems like it's been a little difficult for some buyers to get loans. And if interest rates do increase, do more of these people that may buy single-family homes stay in apartments longer and help that sector?
That is, in essence, what I would say is the $64,000 question for the real estate markets broadly. But simply judging by what we've seen over the past 2.5 years, I think the answer to that is perhaps a continuation of the trend. And what do I mean by that? On one hand, on the residential side, to your point, as you said, we have had basically first-time buyers having to compete with investors, having to contend at the same time with underwriting standards which require high FICO scores. And we've, in conjunction with some of the other federal agencies, we've surveyed our own members. So we know that the average FICO score is quite high, 680 and above, which traditionally used to be in the basically 650 and below. So when you throw into that same equation the fact that student debt has been ballooning. I mean, back in 2000, aggregate student debt in the U.S. was a hair under $90 billion. As of 2016, student debt has exceeded $1 trillion. So you're talking about, indeed, you're talking about first-time buyers coming to the market with an average of $30,000 in debt. But if they have graduate school, which a lot more people are pursuing, if they're doing professional degrees, you can have anywhere from $100,000 to $300,000 in student debt. So the likelihood of someone like that being able to get a mortgage is obviously not as high. So you're now talking about, as you did, higher interest rates. And I think the answer is the multifamily market will continue to see solid demand for years to come. And in a sense, I know a lot of investors have been concerned about the new supply that's been coming online in the last 1.5 years in markets like DC, San Francisco, Manhattan, which has softened some of the rent growth. But given the solid demand, I expect the sector to continue strongly forward. I mean, this last year we had a little over 200,000 units net absorbed in the market versus 240,000 units of completions. But household formation is moving back towards long-term trends. So averages long-term, 30 plus years, 1.3 million new households a year. We obviously took quite a bite out of that during the recession, but we're moving towards those trends, and people have to live somewhere. And so in that regard, I think multifamily will continue being a very attractive proposition. And judging by the investment volume, judging by even the cap rates still being paid for those properties, I think investors are thinking the same thing.
Yeah, I tend to agree with you. And we started this show talking about commercial real estate lending. So I'd like to get your opinion on this. It seems like we've had a nice cycle here of, 8 or 9 years of good times. And we have interest rates that may be starting to rise. If a listener or viewer is getting a new loan, they're refinancing a commercial property or buying a new commercial acquisition today, and they have some options for loan rates and terms. If they have the option to get a 15-year term or a 10-year term or 7 or 5 or a 3, what do you think? What would you say to them?
My approach would be to basically take a very close look at their obviously investment goals, what they're looking for, especially if they're acquiring. And in light of that, I would also say broaden your search for funding. So as I mentioned, a lot of people go traditionally just to banks, partly because it's an easy process. But there are several sources, a lot of which are quite active and offer very competitive terms, like life insurance companies. The trade-off is they prefer longer terms, as you mentioned, 10 or 15 years. However, the trade-off is that you're likely to get, in a rising interest rate environment, you're likely to get a much better rate. And just as importantly, depending on your time horizon, what you're getting is basically predictability in terms of knowing what your debt service will be. In addition, I'll mention for some of the members that are active or investors that are active in smaller markets, the Small Business Administration has streamlined its lending process. So there are two main programs, the 504C and the 7A, which are used by realtors. Used to be quite burdensome in terms of the application, the requirements. There was a reason why a lot of members said none of their clients want to use it. But they streamlined that process, have made it a lot more consumer friendly and faster. So there are some lending sources which traditionally have not been on the radar of a lot of investors, particularly in smaller markets, but I think they're worth a look.
Yeah. Well said, and good tip, and great information, George, as usual. Thanks for joining us on the Commercial Real Estate Show. We appreciate you being on.
Thank you, Michael. As always, it's been a pleasure.
And thank you for listening to the show on the radio stations or iTunes, or watching the show on YouTube or the show website. We certainly appreciate you being with us, and we'd like you to connect with us, comment. You can see us on YouTube and subscribe, and you can also subscribe on iTunes. So and comment on the show and let us hear from you. We appreciate hearing from our listeners and viewers. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.